Let's get a check on the markets now, and DTN grain market analyst Todd Hultman joined me from Omaha on Tuesday. Lots to discuss this week. Farmers are looking to plant more corn than soybeans this year, so what impacts could that have? Plus, there might be some selling strategies you'll want to consider. We'll look at that. But first, Todd estimates corn, soybeans, and wheat suffered a loss last year of about 15 million acres, and returning those acres to production could present some hurdles.
Yeah, and that's a big concern, and that puts a big focus on what our spring weather's going to be like. So my best sketch right now for what 2020 might look like is I don't expect much change in the wheat acres, so I think that 15 million loss is going to be split somehow between corn and wheat. My guess is we'll get about 11 million acres of production out of the 15 back.
What would you say is your price forecast for corn, soybeans, and wheat?
Yeah, so why not make the prediction here at the start of the year? For corn, since we're still looking at an outlook of having a carry out of around 2 billion bushels, give or take 1 or 200 million bushels, it's hard to expect prices to be any different than what we've seen the past 5 years. So for cash corn, I'm estimating a range from $3 on the low end to about $3.90 on the high end. That's kind of a normal range that corn can trade in a year. And of course, the lower prices are anticipated at harvest time, and usually we see the higher prices in early summer.
Do you have any selling strategies that we should be thinking about right now?
Yeah, they're year-long, and of course, for the 2019 crop, fortunately, we started off with some early forward sales of about 50% of production and caught some higher prices then. But now we still have 50% of that crop to sell, as well as thinking about new crop for the 2020 season. The way things are priced right now, I don't see any urgency to run out there and lock in a price. We did catch 25% of production in October when the new crop corn price was a little higher. And so anything on the December corn that we could get around 405 or 4010, I think is probably a fairly good price given the type of outlook we have in front of us. Of course, there can always be surprises. On the case of soybeans, we're so drastically undervalued right now compared to where cash soybeans should be for the carryout that we're showing right now. I just don't see a good pricing opportunity in soybeans, which means we're going to have to wait and hope that the market starts to recognize that we've got a lower soybean supply than we've seen the past couple of years.
And another thing, Todd, when we were exchanging emails before this interview, you mentioned how many of the folks that you've spoken with are looking to plant more corn than soybeans this year. So break that down for us, those numbers, and explain to us why that could have a bearish outcome for corn.
Yeah, so good points. I was really hoping one of the benefits, Troy, of Phase 1 agreement would that be that it would inspire more confidence in our U.S. soybean demand and give us a better soybean price and encourage some more soybean planting this spring. Well, the market just isn't reacting that way so far, and quite frankly, because of the wording of the agreement, we don't have a lot of confidence in just how many soybeans China will buy. And of course, if they do buy them now, it's probably going to be at the tail end of the calendar year, not in time for spring planting. So that puts a bigger burden on corn, and as you mentioned, I've talked around and asked folks what they're leaning for planting this year. And so far, the folks I've talked to from different parts of the country seem to still be favoring more corn than soybeans. The way I see an early planting outlook, I'm looking for about 85 million acres of soybeans, which gives us basically a neutral outlook as far as meeting demand in the 2020 season. But for corn, we're looking at 92 million acres of plantings. And unfortunately, we don't have demand for that much corn at this point. We have a demand for about 89 million acres of plantings, but 92 or anything higher than that is going to add to the ending stocks total that we're already looking at near 2 billion bushels.
And Todd, I know you were also speaking at the National Farm Machinery Show earlier this month. I know you were getting lots of questions, lots of great insights from the producers there. What were some of the big takeaways from that event?
Well, I think the big focus, Troy, there's a lot of uncertainty about how this planting season is going to go. And Bryce Anderson, our meteorologist, talked in front of me about the spring weather outlook. And right now, the 90-day forecast for springtime still looks quite wet for the northern Midwest and the eastern Midwest. That's not a great outlook where we have such a heavy amount of saturated soil concentration throughout the Corn Belt already this year. So there's a lot of concern about, are we going to even be able to plant the types of acres that I was mentioning to you earlier? That's a huge question mark. And even in Louisville, Kentucky, folks were wondering quite a bit about that. The other thing I think everybody's wondering about is just what is the Phase 1 trade agreement going to mean in terms of actual exports. And so we talked a lot about the details, what the agreement is and what it's not. And quite frankly, it's a very tough call to know how this is going to play out this year in terms of exports.
And finally, we might not talk to you again before spring rolls around. So do you have any marketing or risk management decisions that we need to be thinking about now, maybe something that you haven't mentioned yet?
Yeah, I would just keep an eye on the new crop futures, the new crop cash prices at your local elevators. Keep track of that and see if you can get a little better opportunity. Typically, our grain markets are fairly quiet now through April, and the excitement doesn't kind of pick up until May. But it's good to keep an eye on that quote board every day and just see if there's any surprising opportunities that get offered to you. Also, this is the time of year when option premiums tend to be cheap. If you can find a cheap put option out there to help kind of cover some of the risk on the downside of the market, this is a good time of year to check into that. But don't ever spend too much for those option premiums, but they can be very good form of cheap insurance if you buy them right.